the market, given we collected all this liquidity on the S&P 500 after breaking down from 639 all the way down to 632. I think this gives the market liquidity or buyers to be able to fuel the move towards at least 640 to, I would say, 641. So once we come to 640 to 641, this is where I'll return to a neutral stand, where I will let the market do its thing and not bother with what it's doing. So to really draw the zone here, you can see we came came right into that supply zone from yesterday's session that led to the breakdown this morning, and we sold off from there. However, I do believe that there's a chance we move higher tomorrow and retest that particular supply zone there. I think that supply zone is going to hold a lot of weight at 641 area. And if we do reject that, then I will potentially short from there again. So I do believe that we are going to see a little bit more upside heading into tomorrow's trading session, given the liquidity we collected after filling that, we filled that gap there, but we did not fill this one here at 632.32. There are times where we get very close and don't fill it, and that's perfectly fine. The market basically tries to create this confusing scenario where it makes it an either or situation. So despite this looking like an either or, I think there's a good chance we still see 640 to 641 tomorrow. And then this will likely be unsustainable due to the supply zone there, leading us back to the downside. Now, if we do come back down, we can target this gap fill at 632 and potentially this gap fill here at 627. My main target, if the market continues to place lower highs, is going to be this main gap here at 621. 620 has been a major support, as we can see from the last month and a half. Every time we have gone down to that level, we have printed those wicks that pretty much signify overwhelming demand. So today's session did show that overwhelming demand, like I said, and the move was pretty sharp, as we can see. The move was really nice, and we caught the bottom. We did really well. One of our admins here, Rainbond, picked up the SPY November 21st 670 call at 480, and this contract did really, really well, despite it being very further out in regards to expiration due date. The contract did recover really well, and let's take a look at the premiums price. So it's 480 premium. Let's take a look. 670 call there, and she picked it up at 480. So really, really nice move here. Sorry, give me one moment. I don't think it's that. Okay, so we got 670, not the 675 call. 670, and it's trading at 562. So she's up over $100 there, and that is just day one. So if they were to, let's say, head towards that 641 level we talked about, that can potentially add another $100. And it's really, really good to trade that way with a lot of time, having the safety on your conditions, which really add durability. So if you have that type of expiration approach to trading options, then you're really adding durability, and you're trading the price action that you believe are the demand and supply and so forth. But yes, really, really nice entry. Like I said, heading into tomorrow's session, I do expect Nvidia and SPY as well as QQQ to see a little bit more upside. So I'm anticipating QQQ to come to at least around maybe 570, 571. And from there, I'm going to turn neutral, and I will trade price action the way that it will behave and not have any bias. But given that we collected this liquidity and filled that gap on QQQ, this is really good. We filled this gap at 569 and also filled this gap at 560. So I think it's fair that we can get some lower high structure. And if price is unsustainable, then we can target this gap and this demand zone around 553 to 552, where we have seen a lot of wick reactions. That's my thoughts on SPY and QQQ. If you guys want me to take a look at some other stocks, I can as well. If you want to stick around, this is Apple here. Apple is getting very close to my buy zone there. I wish it had gotten to that buy zone so that um, I can enter the trade, but I am looking to buy once we touch 224 and have some demand reaction. The reason why I will enter there is because anytime you see these type of wick behaviors, you can see that as a demand. So there's a chance that we can go down to this particular demand, that wick there. There's a great chance that they can do that in extreme cases. But if bulls do step in, uh, at 224, I think they can see some more upside for a potential higher low structure, followed by potential higher highs above 235 to fill this gap at 239 here. So this is where I think bulls are collecting liquidity for. They're trying to uh, uh, scoop up all the buyers so that they can come up here and fill this gap at 239. So this is why I will be watching the Apple dip buy for a potential higher low structure, either around 217 or this level at 224. That demand at 224 that can really see buyers. So if I see buyers there, I'm going in. And if you do buy, make sure you are buying December calls or you buying October calls where you have the value of time. You're investing into time so that not only you increase your probabilities, the factor of success in your contract in regards to durability and so forth, but you're also investing into, if they do come up to 239, then you are looking to have time, additional time to assess whether you're going to exit or potentially keep for a further continuation. That's my analysis for today, team. I hope you got. I don't want to keep the sessions long as much as I want to talk about more stocks, but that's the daily price action show for SPY, QQQ, Nvidia, and Apple. And see you in tomorrow's session.